The top-level financial metrics for a business are net profit, return on capital employed, and cash flow. But these can seem very distant to those working on the sharp end in supply chain and operations. How can we interpret those measures so that we know that we, in supply chain and operations, are contributing to the overall business success? First, let's look at how supply chain and operations performance can contribute to net profit. This means to help maximize revenue and minimize costs. For those in operations, increasing revenue means producing and selling more of a more valuable output. Satisfied customers will recommend you and keep coming back. All this needs to be done while minimizing the input costs, such as labor, raw materials, and energy. Supply chain has a broader role, sometimes defined as including operations. Revenue is typically made when value is delivered to the customer, not just making something to stock. The delivery itself is also where much of the value is created, contributing to the revenue and customer satisfaction, but also incurring many of the costs, such as procurement, transport, and storage. Return on capital employed, ROCE, accounts for not only the profit, our return, but also the money tied up in the business, our capital employed, both along the supply chain and in operations. We need to look at increasing profits whilst minimizing the amount of money tied up. This is in the form of inventory waiting or moving through the business, as well as equipment, buildings, and other assets used to generate that profit. More investment and more inventory can be okay, but only if it helps generate more profit. So this ratio is very important. What about cash flow? We want to minimize the time from when we spend our money to when we get it back, and the supply chain has a huge role in this. It means moving goods faster from when we buy them from the suppliers to selling them to customers. And it means reducing the time spent in the warehouses, the shop shelves, or in transportation. Operations performance can also have a major impact on cash flow by reducing lead times and throughput times, minimizing the amount of time that inventory takes to be processed. This is true even when your operations primarily process customers or information rather than physical materials. For those working in the purchasing and sales departments, it means negotiating and enforcing good payment terms with suppliers and customers. Every part of an organization should be thinking how its performance feeds into the overall organization's success, and supply chain and operations often have the biggest roles of all.